What's up everybody? Welcome to the Stocks channel. My name is Cory. In today's special weekend update, we're going to take a weekly look at the S&P 500, NASDAQ 100, and the Dow Jones. This is going to better help us assess the health of the market and to see if we're still currently in a bull trend or if it's starting to break down. This is important to know because we want to know the macro level view of the market so we can see which direction the market is likely to drift in the near future. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up we're going to take a look at the S&P 500, and this is the SPX on a weekly chart. So each one of these candlesticks that you're looking at does represent one entire week's worth of price action. So this is a better macro level view of the market, and we do want to pay attention to the trend. So currently we can see that the trend is still bullish, and we know that because all of these moving averages are still stacked to the bull side. Now looking at the price action, we could see this week that we did close below the 5 EMA, but on the SPX, we're still holding up above the 13 EMA. Now the one thing you want to look for in bull trends is you want to look for higher highs and higher lows. We can easily look at this chart and see that we have been forming higher highs, and right now we're in the process of trying to see if we're going to form a higher low or a lower low. So in order to form a lower low on the weekly chart, the SPX would have to close right below about 37.12. You can see that if we do get a weekly price action close below that level, it would be lower than the week on January 25th where we closed on top of that level. You can also see that's going to be about where the 20 simple moving average is going to be on this weekly chart, so that should be a strong support level. If we blast right through that level like it's not even there, that will be a very bearish indication. That is definitely a strong support level, so if it does not hold up on a weekly close, that's going to give us a lot of information about possible bearish outcomes in this market. You can also see that we're still trading above our trend lines, and if I zoom out here, I want you to remember that this magenta trend line did call the top in 2018 in January, and it also called the top in February of 2020 before the March crash. So breaking above that trend line means that we broke above resistance, and that trend line could now act as support. So if we did break below support and we started to go into a bear market, we would next be looking to find support somewhere around that trend line, which is about 36.50. Now that is a trend line, so that level depends on which week we test that support level, but that's the level that I want you to pay attention to. If we did break below that support level, there's another trend line that goes down to the 35.80s. So there's still plenty of support below us, but the fact of the matter is if we're testing those support levels, that means we're definitely going into a bear market. So right now, the number one thing we need to watch is this 37.12 level, because that level is going to tell us that there's more downside coming. Without a doubt, if we close below that level, it's going to be very hard to remain bullish on this market. So in the time being, don't forget we're still trading above the 13 EMA, and that support level is going to be around 37.70. There's also a gap on the S&P 500 SPY ETF at about 377, which also coincides with this support level. So that is going to be a very strong support level, and if it does hold up, that will be a weekly higher low, which means we could bounce off of that level and get ready to try to form a brand new higher high, which would be a brand new all-time high as well. So it's really not time to get bearish on this market, even though we are going through volatility and we are seeing a tech correction. There's nothing on the weekly chart of the SPX that tells us that this bull trend is over just yet. Obviously, all of this is subject to change, but we can only see what price action and what trend we have currently in front of us, and we're not trying to predict the future. We're just trying to see the highest probability odds, and right now that still favors the fact that we're in a bull trend and we're likely going to find support at one of these critical levels. If we don't find support at one of those critical levels, we will still learn something and we will still know our bearish probabilities and where we're likely going to go even lower, where we could possibly find future support. So right now I'm still bullish on the SPX, as you can tell from this chart, because we're still holding up above critical support and we're maintaining a bullish trend. Now that doesn't mean I won't be defensive in my trading, because we've definitely seen volatility, but it's important to know longer term outlook that we're still in a bull trend and we're still likely going higher in the long term. All right, next up, let's take a look at the NASDAQ 100 NDX index. And again, this is still a weekly chart, so every single candlestick is one entire week's worth of price action. So if you're following along, you know that the tech sector got absolutely routed last week, and you could see how bearish this red candle is. We did close right about on top of the same support level of the low back on January 25th, which is right around 12,930. But more importantly, you can see that we did find support intra-week at the previous price target, which was this 12,784 level. That level is just above the 20 simple moving average, and you can see that we did bounce off that level and close higher for the week. So on the NDX, on a weekly chart, if we do close the end of the week below 12,784, that is going to tell us that the NDX is looking bearish and we're likely going much lower. Now, how low we go if we break below that level is to be determined, and of course I'm always going to continue to do my daily analysis so you'll know which support levels to watch for. But we still do have a positive sloping 20 simple moving average down around 12,600, and if we did break below that, we could go much lower as well. So we are at very critical support levels on the NDX, even though we're not quite there yet on the S&P 500. You could see that we're still in a bull trend, but the 5 EMA on the weekly chart is definitely negative sloping and it is starting to head lower. It's still above the 13 EMA and all of these moving averages are still stacked to the bull side, so it still counts as a bullish trend. The price action did close below the 13 EMA, but it's still holding up above a positive sloping 20 simple moving average. So even though the tech sector had a ton of volatility, and it is definitely seeing a correction, we're still in a bull trend on this weekly chart, and we're still holding up above critical support. Now, if we do start breaking down below critical support, that's subject to change, and we could start going into a bearish trend. But with the price action and the trend we can currently see in front of us, we're still bullish on the NASDAQ 100 until proven otherwise, which means that we need to see those support levels break down. Remember that bull markets have higher lows, and this is still currently a higher low until we close below 12,784. Now switching over to a monthly chart, you can also see that the NDX index was also trading above the upper Bollinger Band before the correction started. So closing the month of February down here around support and well below the upper Bollinger Band means it's actually giving us more room for the month of March to possibly head higher. That doesn't mean we have to go higher, but as I always say, when we're extended above the Bollinger Band, it is likely that we're going to retrace and see lower prices. So in a way, this is actually healthy for the bull market because if we close the month of February at those all-time highs and extended above the upper Bollinger Band, it really didn't give us a lot of upside to continue to run. So cooling off in the month of February and closing lower is actually giving us more room to run in the month of March. That doesn't mean that we have to go higher, but it definitely helps because the technicals have cooled off and it gives us more room to run to the upside without being overbought. Now let's jump over to the Dow Jones weekly chart, and this is the DJI index that we're looking at. Don't forget, every candlestick is still a weekly candlestick, so it represents one entire week's worth of price action. So on the Dow Jones, we're still in a bull trend because all the moving averages are still stacked to the bull side, and we could see that the week did close the price action below the 5 EMA. Now we're still holding up well above forming a higher low, and we could see on DJI that we would have to close below about 30,000 to form a weekly lower low. Right now on the Dow, we're still looking very bullish, and the trend has picked up lately, and we were forming all-time highs this week before we saw some selling near the end of the week. So with that being said, we've now looked at all three indices, and all three indices are holding up above critical support levels. They're still forming higher lows and higher highs, and we see that the price action is still holding up above critical support levels. So it's not like we're going to say that this bull market is over because there's no reason to believe that it is until we see something start breaking down in these charts. If these support levels start breaking down and we see these trends start to shift, then we will switch to being bearish on this market. But right now, I just want you to be defensive and I want you to pay attention to my daily analysis where I give you these critical support levels that I want you to watch. As far as this macro level view, you can see that this little bit of volatility is really just a blip on the radar. If you're looking at this chart, as painful as last week was for some of you, it really wasn't that bad on the chart, and it looks like we barely cooled off at all before we're ready to go higher or possibly go much lower. So yes, it is possible that we go much lower. That's why I'm trying to show you that these support levels are much lower on these charts. For example, on the Dow, to our support level at 30,000 is still over another 3% drop before we get to that level. So be defensive and pay attention to my daily analysis because I'm giving you much more information on what's going on day to day. If we go over to a monthly chart on the Dow Jones, you can also see that we were trading outside the upper Bollinger Band at one point in the month, and we did cool off and close inside the Bollinger Bands. That's going to give us more room to run in March, just like it did with the NASDAQ. We can also look at a monthly view of the SPX, and we can see the S&P 500 was also outside the upper Bollinger Band before it saw some selling and came back inside the Bollinger Bands. So the NDX by far saw the most selling, but all three indices were extended outside their upper Bollinger Bands on a monthly chart. And don't forget that a monthly chart carries more weight than a weekly chart and a daily chart. So if we're getting too far extended on these monthly charts, we're going to see selling. There's a lot of greed in this market, and that greed does get punished. And when we get to new all-time highs way too fast, and we go too far too fast, and we get too far extended, we will see selling and we will see volatility. Now, just real quick, let's also look at these monthly charts, and we can also see on the SPX that we have a bull trend and the price action is over the 5 EMA on the monthly chart. On the NDX monthly chart, we have a very strong bull trend and the price action is still above the 5 EMA on the monthly chart. On the Dow Jones monthly chart, we also have a bull trend and the price action is closing over the 5 EMA. So on a weekly chart and on a monthly chart, we still have very strong bull trends and the price action is well within the levels of forming higher highs and higher lows. So I hope this macro level view of the market really helps you out and helps you understand the bigger picture. Obviously, daily price swings are still going to be painful no matter what the monthly and the weekly charts show you. I just want you to have a better macro level view of where the markets are coming from and where they're possibly going. Don't forget that I still have higher price targets for the year 2021, but there's no guarantee that we have to hit them in the first quarter of the year. We could go through a correction before we go higher and hit those targets, but I am still bullish on the year 2021, and I still do have price targets higher than these levels that I do think we will get to. So right now, let's just play this market day by day and take what the market gives us and don't take anything for granted. Especially in volatile times, we want to get in our positions and we want to take our profits at resistance levels, and we don't want to get overly confident that we think we know what's going to happen. So if you're interested in trading this volatile market, consider checking out the Stocks Channel Discord. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. Remember to be disciplined in these times, and if you're not sure what to do during these volatile corrections, just walk away from trading and come back when the volatility subsides. So thanks for watching, everybody. I hope you enjoyed this special weekend update, and as always, I will see you in the next episode.